Hello, this is Patrick. Welcome to Chart Built Wealth. It's Sunday evening. I believe it is December 8th, and I wanted to go over my buy recommendations. And so let's get into it because I have a lot to cover in a short period of time, because I know that people don't watch very long. So let's go here. Let's take a broad overview of the S&P 500. I'm not making a market call here. What I see is a bullish channel, and I see us overbought way above the bullish channel. I also see a big negative divergence on our RSI as we hit higher highs in price. We're hitting lower highs on our relative strength index, flashing a caution sign, beware, a change of trend uh, is near. But can we get through the end of the year? So I think things are looking that way. But regardless, I would say I'm neutral to bullish right now through the last few weeks. Um, but there's things to buy. So let's get into that. I wanted to first step back and take a look at TLT. I want to look at fixed income. I want to, because it's a big opportunity. It's been a contrarian call going back to uh, May, actually, and buying TLT at approximately 89, and it's currently at 94.39. So it's appreciated nice, and you've been getting a 4 to 5% dividend, and with for less risk than the stock market. So this is, the big call here was the big inverse head and shoulders pattern, which I got involved in earlier, but this pattern is suggesting 115. So 115 for fixed income over at approximately 94. It's a big move, and it's over 20%, 25% or something. So anyway, I've raised my stop to 91.50 on this. We were able to break through the moving averages here, but let's take a look. So this goes back, what, 2 years, 2.5 years? We're going to take a look at just the last 6 to 8 months. And here we are. What we have here is a rainbow convergence, a bullish rainbow convergence where all the moving averages are coming together with prices above. So prices will either stall here for a little bit until these moving averages catch up, which is a type 1 rainbow convergence a la Tom McClellan, or we get a retracement back to that convergence and then we see if it holds. So I'm thinking it's going to be the latter. I don't know why. Just I've seen a lot of these, and there's a lot of uncertainty on fixed income and interest rates and what the Fed's going to do. But I would not be surprised to see us get a pullback to 92 and a half, 93. And then the big question is, can it hold there? So if it holds, then it promises a higher high, and then that would put our bigger pattern in place. And so what I did on Friday was I sold probably 25% of my fixed income, and I will be looking to, I think upside short term is limited. And if we get a pullback here to 93 or so and it holds, I'll buy all of that back, if not more. So that's fixed income. I think you'll see that across the curve. And it's, again, it's an interesting, uh, with interest rates pretty high, it's an interesting thing to get that kind of potential appreciation and the dividend. Okay, let's move to stocks. So I'm going to kind of go in order where I see a lot of potential. This was the new call on Microsoft. I'm glad to have a U.S. technology name in here. I also have Tencent, a Chinese technology conglomerate, as a buy rated. But this is a big U.S. stock, bellwether, and we have a big symmetrical triangle. Now, this pattern is not that big. It's only 5, 6 months in the making. These other patterns that we're looking at are 2 years, 3 years. So this is short term. This is maybe over the next 3 to 4 weeks, but the pattern is suggesting a price projection of 517, which would be 19% or so. So I'm putting my stop at 417. So the reward to risk is interesting. Exelon, this is a utility. As you know, we've made a lot of money in utilities over the last year or so, year and a half, and I see a breakout in Exelon. And this is a 2.5 year pattern. I would say this is an descending triangle with a descending resistance line and a flat bottom. We got the breakout. I initiated here. We're a little bit underwater. I'm moving my stop up from 96 to 37.50. So well, hopefully that's not too tight. But I'll be watching this. The upside is 35%. Um, I'll be watching the stop. It might be a little bit tight. I like this pattern. I like the potential upside. I like that utilities are defensive in nature. So it looks good. Here's a small cap idea for you. If the market does well into year end and early next year, uh, this is again a 2.5 year pattern. This is a symmetrical triangle, rising support line, descending resistance line. Prices broke out and now it's come back and retested that. So the potential upside is uh, 31. So it's 50% plus on the upside. Now you can put all your risk in something like cryptocurrency, which doesn't have this kind of upside over the near term, because I've traded cryptocurrencies successfully, Bitcoin recently. This has way more upside. It's risky, it's small cap, but this is what we got. Here's your stop at 18. Okay, commodities. Platinum, it's right near our stop here at 85. We're buy with a stop at 87. How did it get 87? This looks like 85 to me, so I apologize for that. My stop here is 85. And again, this looks a lot like Mattel, right? So the potential upside is huge if it can hold here. Copper is kind of the same thing. As I said on the last week, that both platinum and copper aren't at the top of my list because we could have some more downside. We have a bearish rainbow convergence, the opposite of what we have in TLT and in fixed income. And if prices can't get above 27, then it should get another lower low, which might come down here to 25 or so. So I'm still bullish copper. I'm not aggressively buying at this time. Here's China. China looks good. It held right at support, held right at our stop. Here's our inverse head and shoulders pattern. This is a year and a half in the making. Shoulder, head, shoulder. Big breakout, big retracement now. As I told you, sell, 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 sells was going up. And now I've been buying, buying, buying down here. And we got a buy stop. We got a buy recommendation, a stop at 29. Still looks good. Reward to risk is great. And here's 10 Cent Holdings. This is a ascending triangle, a flat top, and an ascending support line. So A, B, C, D, E. It's got all the touches. It broke out with Chinese stocks, and now it's retested. And the potential upside here is really huge. Let's say we're at 52 for the sake of conversation. You're I don't know, 60% potential upside. So we got to buy with a stop at 50. Energy stocks had a really bad week, down a lot, but still holding our trend support, still bullish outlook, pattern is intact. Uh, I was saying sell some a couple of weeks ago. I'm sorry, don't sell some now. I would be adding gradually to my position on this weakness. I did all week. REITs, this still looks good. Big inverse head and shoulders pattern with a 112 price projection. Here's where we got bullish on it. It was able to hold our stop. It's still holding our stop. Had a bad week. All interest rate sensitive things had a bad week, but I thought that was a time to buy. Those were times to add to these positions. So again, I still think prices are going higher. I'd buy with a stop at 97. Please like and subscribe. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great evening, great holiday. Have a great night. Thanks.